Hi everyone, this is Manish, and in today's video I'm going to talk about one of the very important characteristics which differentiate the rich class and the middle class, and that is nothing other than the taxes that they pay. So needless to say, rich income class pay way little taxes than the middle income class, right? And let's understand why that is the case, right? So primarily there are two reasons for this, and let's get started with this, right? So the first one is that the rich income class usually owns a business, right? And they are not dependent on any salary income that they draw every month, right? And the tax treatment for both of these are very different, right? So what happens in case of a business is that they incur a revenue, right? This is what their sales is, and then they do not directly get taxed on the sales. They get to spend everything based on their business operations, marketing and general expenses, interest expenses, and all of these, right? Their employee cost, all of these they first spend, and then whatever profit they are left with, they are only required to pay the taxes based on that profit and not the whole revenue amount, right? Or the sales amount. Whereas in case of somebody who is earning a monthly salary, what happens is that the person gets taxed first, and then whatever residual amount the person gets in hand, the person gets to spend from there. And of course, whatever you buy from the income that is post-tax, you again pay taxes when you buy stuff, right? So that is one of the differences, right? Where an income generated by a rich income class, people who owns a business actually gets taxed very little. The second difference is rich income class owns a lot of equity investments, right? And what happens in case of equity investments is the tax slab rate or the rate at which any income generated from equity gets taxed is actually very less, right? So what can happen in case of a salaried class? The maximum tax slab can be as high as 30 to 33%. But in case of equity income, if you're generating equity income, then if it is for long term, then you only pay 10% taxes, and then if it is for the short term, you pay slightly higher, which is 15%. So at max you're paying 15%, versus whereas what it can be at 33% in case of a salaried income. So that is not the only difference, right? What also happens is that when you sell your equity investments is when you make the profit, and if you let it compound over a period of time, you are actually not paying any taxes, because you are accruing all of these returns that you're getting, and you're letting it compound, right? If you let this compound over a period of, let's say, 5, 10, 15 years, you do not pay any taxes in between, right? Whereas in case of a salary income, you keep paying taxes every month. So I thought I'll clarify both of these reasons as to why income category, the high income category pays very little taxes versus the middle income class people. And that is it for today. I hope you liked the video. Until we meet next, God bless.